how do you recover and go back up? How do you iterate? How do you make new processes? So you're the true hero in my eyes. And if it weren't for you, I wouldn't be able to do what I do. So I'm going to go down this list rather quickly. I did create already content on this in the past, so I'll try to link that video to you down below in the description. And I want to go to the most updated version on an unsecured term loan. But first of all, usually you get between 10 to 15% of your annual gross sales / revenue approved for, if not up to 20% in some cases. And that has to be exceptional details. I'm talking about cash flow, revenue, perhaps profitability is a factor for how many years, year-to-date financials, your profit and loss. That stuff looks good if we have to look at that and verify it. But keep in mind, again, this is without collateral. You can keep your interest rates low. There's one where I can even show you with 6 to 25% or so, 6 to 30% in some cases. And that's the one I'm going to show you first, and then I'll revolve around the other ones that you've likely seen in the other video. In a lot of cases, you get approved between 50 to 100% of your average monthly sales, sometimes within the last 6 months, and even another by 50%. So you're looking between 50 to 150%. And to get even to that high amount, like I said, again, your details have to look good. You're projecting upwards, average daily bank balances, the bank statements look clean, your revenue is up there, more time in business helps, your credit looks good. And that's what I'm going to jump into in a second here. So let me scroll down to the option that has then been added with another monthly lender in this market space. So up here. Here it is. So this should be a 2. I just made some recent adjustments. So over here, how does getting between 30,000 and 350,000, and within 5 minutes, you can see if you are pre-qualified with the soft credit pull. No hard pull at all here. And it's much more efficient, faster, a smoother, hassle-free process. Here are some of the benefits that I've listed. This is unsecured financing, which if you didn't get, it is where you don't have to offer up collateral to receive funding. And again, no assets, no home on the line, none of that. Over here, you get 1 to 5 term years, okay? Now, if you've seen my other content, you perhaps heard me say you can get between 1 to 2 years, 1 to 3 years at most in some cases. Other ones, I said 2 to 10 years, but that 2 to 10 year, it's a little bit more difficult to get. It's kind of been removed in a way. But just keep in mind, when I say 1 to 5 years here, if you're going 3+ years in a lot of cases, yeah, we can use that as working capital, but at the same time, we want to make sure you're using this for growth and expansion. What return on that investment will it give to you between now and those 3 years or 3 years and above? And a lot of the cases, lenders want to lend it towards equipment purchases with unsecured financing. So if you're that individual who goes, well, I've been approved, or I've been getting 18 months or 10 months, well, if you're getting approved for 10-month terms, perhaps this wouldn't even work. You're not even reaching the 1-year mark with perhaps another service. And this is not a merchant cash advance, just so you guys know. This is different. This is not those daily or weekly repayments. And again, you don't always qualify for this, so the other one may make more sense to begin with, and then you have to move your way up to a product like this if it's something you want to do and if it makes sense financially, your return on your investment within your activities as well as your ROI within your finances. So again, 1 to 5 year terms, which gives you more flexibility between just getting 1 to 2 years. But in a lot of cases, people end up getting between 1 to 2 years to begin with. So, you know, an expected time frame, I would say, is 1 to 2 years with a lot of these. If you're getting 2+ years, if you're looking for that mark, then perhaps an SBA loan, an SBA Express Loan, an SBA standard 7A loan. It's the same thing as underneath the Express, just a little different of a quantity and a little bit different expectations. So if you're looking at 1 to 5 years unsecured, I'm not saying it wouldn't happen where you get more than 2 years or you get 3 to 5 years. It just has to make sense what type of return on investment that is. You're purchasing more inventory that's going to need to be tested over time. You're opening up a new building. you're creating new concrete, adding a roof to this, and then you have equipment you're purchasing on top of that over 300,000, 500,000 or more or less. Well, it may require, because of that piece of equipment attached to the working capital and everything you need, and you have the financials to back it up, then we could perhaps look at giving you above 2+ years. But everybody has this expectation that, no, I'm looking for more 3 to 5 years. Now, the difference is you need to understand when you're taking unsecured financing, it could be inexpensive. Sometimes it could be expensive because you don't offer up collateral. The lender is assuming 100, if not 110% plus of the risk. So what that tells you is, even if I get 1 to 2 years, I have to understand that that funding, when will it return an investment from return on investment for me? What would it look like in the short end or long term? And say, well, I want to get rid of this debt as fast as possible so I don't have to pay more towards the interest. And that's when they become a little bit more expensive, when you're paying towards that interest more than the principal. And so it doesn't always make sense to take one of these. So again, like I said, if you're offering up that and you're getting up more than 2 years, sometimes an express loan make more sense if you have the profitability factors, the year-to-date financials. And not in all cases does the unsecured financing have to look at exact profitability, but it does help, and it does weigh into how much you can get approved for, which I'll cover in a second. These are lower interest rates, a monthly repayment. Oh, by the way, if you guys want to learn about the SBA 7A program, I've already created content. I'll link you guys to down below in the description. Now, you have lower interest rates. You get a monthly repayment, soft pull. All 50 states are eligible. Let me move this here. We'll just do that. Didn't have to be. More details. The approval is based on your overall yearly income. This meaning your 2+ years, usually 2.5, 2 to 3, of business tax returns, personal tax returns, year-to-date financials. We have to look at the whole scope and see what that would get you approved for. So all factors are looked into to determine what you as the client can qualify for, which would be, again, those personal/business tax returns, profit and losses, as well as, if I didn't say this already, the bank statements. So of course, there's a little bit more documentation that needs to be supplied to get you approved, and all 3+ factors are in play with this type of lender. And if you don't want to have to supply that amount of documentation, there may be an alternative route with a hybrid cash advance product that I recommend, where it's not just based off of credit card transactions, rather all forms of cash flow and revenue that's coming into your business. And a lot of the times those products can keep your percentage 50% and below, and it's more least expensive in a lot of cases compared to what you can get with a term loan. Let's say you could get approved for 3 years, but it makes more sense for me to pay this off in a year, and it makes more sense for me to finish this in less than 10 months. And if that's all I qualify for, then that's what I can start off with and then move forward. So more details, approved based on your overall yearly income with a few other factors. No prepayment penalties, and then there are early payment discounts. Now, if you've heard me say this in the past, there are cases to be made where the amount you can get approved for, it could vary between 50 to 100, 50 to 150% of your average monthly sales. If you've heard me say that. Now, some lenders are different, and they'll look at the last 6 months of bank statements, sometimes 3 months, but a lot of these unsecured term loans, they want to see at least 6 months of bank statements. And they'll make a prediction and say, oh, they'll get an understanding as well as myself and say, well, what are your average monthly sales within the last 6 months? And what is your highest monthly sales in the last 6 months? Is it projecting upward? Is that highest month the most recent month? If so, we can take that number, and we can also look at the average monthly sales and kind of look at the two, base it off the highest amount, if that makes sense. In a lot of cases, it's the average monthly sales. We look at the monthly revenue as well. And you hear a lot of monthly revenue when it comes to like the cash advance type of products. Over here, pre-qualification and your eligibility criteria that you should meet. Time in business, 2 years at least. Annual revenue requirement of $250,000. So you're looking at doing that above 20K plus per month. Credit score, 660 plus FICO. Soft pull for pre-qualification, so you don't have to worry about getting a hard pull. Ownership, the applicant or applicants must be U.S. citizens or residents. So if you've ever applied for business funding, please list those owners if we ask for it. I know there's sometimes you have 70, 80, maybe 100% ownership and you don't have to. Some of you have 50-50. Maybe you've been lied to from another brokerage or broker or agent and told you just to list yourself as the only owner 100%, but instead you have a 50-50, 60-40 partnership. Well, we need to see that. And that'll also factor in to what you get approved for. I'll go to the comments in a second. Welcome in, Armando. How are you doing? So what I mean by this is if you have a partnership, 1 or 2, 3 owners in the business, and we're asking on the application that you list them, please do so. You may be doing it by accident because somebody else told you, hey, just put 100% ownership. It's fine. And you don't have to list somebody else because your credit is better than theirs. See what I mean? So you don't think this will go uncovered? Like, we'll find this out. There are things within the Secretary of State, the IRS. There are a lot of things that happen that can easily be found out. How many owners there are in the business? What's the actual overall credit score of this other owner? And in some cases, like 50-50, a lot of the time we'll look at the 2 owners or 3 owners, however it's split, and say, hey, what are their credit scores? And we'll see the lowest one. We'll see probably you have 600 and above, 700 and above. It's great. It's excellent. It probably just shifted. But over here, this business owner has a 500 to 600 level credit score or more or less. So what will happen is, especially with 50-50% partnership, that business owner's credit will be a factor, and this will be a readjusted funding amount, and it can reduce your offer by quite a bit. It can reduce it by 20, 15, 10,000, if not more. It can completely disapprove you if you're not within the credit limits requirements, but you are and the other person isn't. Maybe it's the amount you're getting. We can't go any lower, so we'll completely take the file off and tell you to fix your credit, work on those inquiries if need be. But that's what can happen. That's the reality. Now, if you're kind of leaning into that 70%, 80% partnership that you own, and the other part is 10 to 20 or so, then perhaps we don't have to always look at their FICO credit score. And if we did, it wouldn't ultimately be that like big decision factor, and it probably wouldn't adjust the offer or it wouldn't mess with it too much. So it's less of a factor in that regard. So if you own 100% of the business, I mean, it's straightforward, probably not even a concern. But as you move forward, if there is a partnership, just keep that in mind. Ownership, applicants must be U.S. citizens or residents, as I said. Business credit, and this is no recent bankruptcies, tax liens, or judgments. And to add on to this, I'm going to put it in caps locks because a lot of individuals don't have this. Please establish your business credit with all 3 business credit bureaus, not just Dun & Bradstreet, but the other ones as well, Experian, Equifax, etc. And make sure that something is reporting on your credit reports, that you're building a payback score, you have the right payment structure, you have some trade lines reporting that would be helpful. And if you haven't already, maybe your business is set up differently, how you're accepting payments, but everybody can build their business credit. It's open. No matter how much you build it, at least it shows. And if it's active, it gives the lender more security. And they go, well, they're comparing your personal and business credits, not just looking at recent bankruptcies, tax liens, or judgments, but what's your score? What's your financial? What are a lot of the other pieces of it? What's actually reporting, what has reported in the past? And they can look at creditworthiness. It's the same thing when you're going to apply for an equipment loan. I mean, equipment financing, a lot of people get declined because they don't have business credit established or not enough of it. So make sure that's a factor. Time to fund, it is 1 to 2 weeks. I know it's a little bit more time that it takes, but that's because we're looking at extra documentation to approve you, an extra underwriting step. So that's okay. And it's still relatively fast. I know there's the cash advances. If you're looking for funding much faster, that takes, same day instant approval funding. Within the same day, you can get approved and funds deposited within 24 to 72 hours, 1 to 2 days, 1 to 5 weeks, 1 to 5 days, depending on your file. There's that product as well. And I'll leave you more information to it down below in the description. And you don't have to supply as much documentation. It's only about 3 months of bank statements, copy of your driver's license and a voided check, sometimes 6 months, 12 months, depending on the industry. Agriculture, and we know we need a lot more seasonality. But usually 3 months, sometimes 4 to 6 months, but it's very straightforward. And if you're asking for a little bit more, north of 150,000, a lot of the times with those products will require a recent tax return, year-to-date financials, etc. Interest rates. This is the cool part that a lot of people would love. And this is where this new monthly lender has kind of opened the doors. And I want you guys to see this, but in a second, just understand that the market is always shifting. So what you heard about a product you can get between 2 to 10 years, entry level at a 500 FICO with just 3 months in business may not be available, or it might not be as easily accessible. I know a lot of lenders that are in the monthly lending space, they're not doing that, where they're accepting people with such a low FICO, just 3 months in business. And you'll see that in a moment and what I listed on a different service. But since the banks aren't lending as much, they're going, okay, well, we see we can't give them this amount of money. We cannot give them over 3+ years. We cannot do this. So they're open to say, hey, we have private lenders who can do 1 to 5 years. And a lot of the times you'd see that with a little bit of a higher rate. And I'll get into a different product on what those rates are. But usually people who get an unsecured term loan, it's 1 to 2 years, 1 to 3% interest per month. So if you have 12 months and you got 1%, you got 12% interest, which is a bargain in today's market. And that's usually what a lot of people end up starting with. And then others who say, well, I was assessed at a risk of 2% interest for 12 months, so I have 24% interest I'm paying, which is still relatively good. And it has to make sense using those funds. They benefit it, and that exceeds your repayment. It may not just be sitting in your account collecting dust, if that's what you're thinking you wanted to do, because you want to use that funding whenever you need to, and you only got 18 months, and you're like, well, I wanted 3+ years just so I can have 6 to 12 months of that money just sitting in my account and using it whenever I need to, or it won't return and give me a high return on my investment like what else I'm using it for. And there may be instances where that makes sense. Or an SBA Express, an SBA standard loan up to 10 years, 3 to 5, 5 to 10 years will work for you. And one of these can as well. Just the use of funds has to make sense. And again, a lot of lenders going 3+ years want to lend towards equipment, making sure you have a high growth and expansion project or projects that will return a great return on that investment to give you that amount. So ranges from 6% to 25% interest with early payment discount. So that's a bargain. And 6% is keeping it relatively low. When we talk about prime rates being at about 6.25 right now, and an SBA loan usually is 6.25 right now plus 2.75%. So you're looking at about 9% to start off with, not being considered variable interest. So if it says 6% in interest right here, take that with a grain of salt and think, well, maybe it won't be 6%. Maybe it'll be 9% to 12%. And that's what a lot of people can end up getting, 9 to 12% for 1 to 5 years. You may get 1 year at 12%, which is just fine. You may get 2 years at this amount on 15%, but that's still a bargain compared to another monthly lender who was saying we'd give you 25 to 50% interest, but they lowered the credit requirement and the time and business requirement. Revenue was more or less the same at around 20,000. So that's a bargain. Now, documents that are required after pre-approval: 2 years of business and personal tax returns, 6 months of recent business bank statements, a business debt schedule will be asked for, year-to-date financial statements. So I will leave it there for that part of this equation. I know there might be more questions you have, but it's all right there. And let me move into the first option over here. And if I have time, I'll go through some other things. So perhaps you've already seen me do a video where I spoke about this one in the beginning. So unsecured term loan, this is higher interest paying over time as well as the other one. Just think about it. You're paying more towards the interest. But you can get an unsecured term loan of usually 1 to 2 years without collateral, sometimes extended to more like 3 years, depending on the circumstances, like needing more time and if you're the best of the clients in terms of funding details. Just make sure you're not bouncing checks and spending more than what you're bringing into your account. And like I said again before, a lot of lenders will not give you, they'll not try to give you 3+ years unsecured term loans. If they can avoid it, they will. If you can qualify for 3+ years, then perhaps an SBA Express loan will be your way to go, and I can help you get set up with that in a few other circumstances. And if it's funding for equipment, it may be more justified to get you 3+ years. So I said here I would not recommend it first paying due to paying more towards the interest, which isn't best, but it will help you if you have strong cash flow and can make a big payment at the end of the month and would ideally like a monthly repayment. Here are some of the details. No prepayment penalty. Monthly payments, they are available. Reports to the business credit bureaus. So as the other monthly term lender, they want to make sure you have business credit established and that it could be reporting. 1 to 2 year terms, sometimes 3. But again, like I said, if it's even pushed to 3 years, it's more so for equipment purchases and higher return on those investment projects that have to make sense. And usually when you're getting it 3+ years and you're financing it for equipment, they want to look at over 6-figure funding, 300, 500,000 and above in a lot of cases. And if that's what you're looking at anyways, it probably makes sense to do more of an EFA, a lease with an equipment financing situation, and I can help you get set up with that. Refinance up to 2 merchant cash advances, premium and platinum levels for stronger clients. That meaning if you have higher cash flow, there's different tiers of funding you can qualify for. Qualifications, 2 years time in business of 660 FICO, so similar to my other monthly lender. This one, though, is expecting $25,000 deposited monthly into your business bank account or $300,000 in annual sales. So the other one we see by a $50,000 dip. The other one we can get you in with at least $250,000 in annual sales. This one we'll look at doing $300,000. There are no bankruptcies, no liens, foreclosures in any of the last 3 years. So similar to the other one. Trucking, and I wanted to make this clear. If you're in this business, but you don't have 5+ years in business, it really wouldn't work and wouldn't be in your best benefit to go for a monthly repayment until you get to that stage. And I know the market shifts, but that's where we are right now. And it's been like this for some time. And I know if you're that business owner who has under 2 years, who says, I'm 2 years in though, 3 years in, but a lot of lenders are looking at saying, hey, I want you to be doing 5+ years, more stability, cash flow. After you get out of that 2-year frame, you're still kind of in that quote unquote, just new business, not exactly new, but once you get 5+ years and over, you're considered more, hey, you're way past that honeymoon phase. You're not a startup exactly. You're not just 2 years in. You have enough credibility in your space. We can help you get a monthly repayment because it's such a high risk industry. One truck blows out, you only have 3 trucks. How are we going to give you 5+ years? How are we going to give you a monthly lender, even if you have 5+ years, but your trucks are just blowing out, you're having problems, you're losing individual supply chain issues? We won't give you this product. We might just send you to a merchant cash advance where there may be a monthly term lender there, but it's very rare you see that. And you have to have exceptional details to qualify for a monthly cash advance. So it could, in a lot of cases, be bi-weekly, but more so weekly and daily. Now, more details. The rates here are about 1 to 3% per month. Approvals are usually typically 100% of your monthly sales, and it can be higher or lower by 50% or so, depending on factors such as your credit score, industry type in business, debt, etc. And then, if we ask for the recent tax return, year-to-date financials, we won't always have to look at it overall. We might just look at your 6 months of bank statements and make a prediction off of that. And that could be a little bit different with this type of a lender as opposed to another monthly lender who says they're looking at all factors like your personal tax returns, your business tax returns, year-to-date financials, profit and loss, and they'll make an assessment on how you get approved for based off of all of those values. And then other lenders will say, hey, we'll just look at your 6 months of bank statements and we'll see what the average monthly sales are, what's your highest monthly sales, and make a predicament based off that. But at the same time, they also will look, you have that monthly lender who will look at your file and go, here's your recent tax return. Okay, there's a loss here. Well, we're going to have to make a readjustment to how much we can actually approve you. So in a lot of cases, it may make more sense for you it has to make sense. So if you're an individual who's requesting $200,000 and you get approved for $200K more or less, and you're like, well, I could have got approved for $300,000 over here because they didn't look at all these different parts of my documents. They just looked at my 3 months of bank statements, if not 6 months, and that's it. And they were approving me for a little bit more. Approval percentages were probably a little bit higher, up to 200%. And so you have to weigh the pros and cons of taking $200K now versus maybe $250,000 to $300,000. Or if you have collateral and you want to receive more in one take, then we can look at heavy equipment in one case, real estate, and a lot of the asset-based lenders are looking to finance individuals who are doing, I'd say, about $500,000 and above in annual gross revenue / sales, or 600, more so 700,000 to $1 million plus, to be even considering your collateral, because the appraisal, everything, the valuation has to make sense. And if somebody who has collateral and equipment, etc., but they're only doing $15,000 or $20,000, $30,000 a month, a lender is not going to make sense. They're not going to make interest on that. They're going to make money on it. So they're going to be at a loss instead of that. So it has to make sense. I wish to speak to you. You have a client with good credit and they need an SBA loan. Feel free to send me an email, Armando. Sorry, I didn't address this earlier. Michael@viralfundingsolutions.com. I'll leave that for you, everybody in here. What I also want to do is make sure I send you guys a business funding questionnaire that I have set up on my website. And what this does is it'll allow me to evaluate and analyze your business funding details and then see, okay, what can I pair you with? Who's the best lender for what you need right now? Will it be in the future? What's happened in the past? It's a better way for me to get an assessment. So I will copy and paste this now. And there is no description for those of you live right now. So I will, once this updates and YouTube has it up, then I will go into the description and then I will add everything. So please be patient with me. So going back to this, you saw that the rates are about 1 to 3% per month. The other one we saw we could do between 6 to 25, sometimes 6 to 30%. You may fall between 7 to 15% because we look at prime rates plus what the SBA is approving for. You're looking at a minimum of about 9% right now in some cases. And then if you're doing an unsecured term loan, they may not even give you 9%. They'll say we'll start off with 12%, but we'll only give you 15 months. Well, I wanted 3 years. Well, do you qualify for that? Do you have profitability? Do you have the right tax returns? Are you operating at a profit? What are your assets and liabilities? If we have to look at collateral, we might not always ask for it or need it. If we're looking at an SBA loan, we just have to look at cash flow. So a lot of people think they need 3+ years when in fact all they needed was like 10 months, 7 months. They needed 18 months, 24 months, between 2 to 3 years if need be. Just make sure you're not over leveraged and that you can always come back and receive more funding. That's the way you want to do this. This is a long-term relationship. This isn't I just want to get funding and just have it in my account sitting there. If you want that, then take a line of credit and have that money there whenever you need to use it. So over here, we saw that approval percentages. So this can also be based on your highest monthly sales within the last 3 or so 6 months. Well, let me move this out of the way. Sorry. Within the last 3 or so 6 months, if you're going upwards in your trajectory on your projections, and you're going up, for example, if June is 101K, July is 115K plus, and August it's 124K plus, and if your latest month is higher than the rest, even better, then we can take that into account with your highest sales month and make a determination of 50 to 150% of that. Or we can just take your average monthly sales. In a lot of cases, that's what we end up looking at. And it depends per lender, but that's usually the case. So here are some quick key points. You usually get 10 to 15% of your annual gross sales, and sometimes up to 20%. And the way it's increased is by having very strong cash flow. Credit, the industry is a factor, average daily bank balances, and more. And it's not the only way. You should have a relationship where if it's not strong now, but you get approved for one, come back and receive more over time. That's how it works. You're frequently depositing like at least 3+ times a month, preferable, and not fluctuating much. You're depositing your funds into one primary business checking account and not transferring between someone else's account like a vendor over and over again, which looks suspicious and is hard to track, and it's not counted as organic or real deposits, which looks like online transfer from checking. If you've ever seen that on your bank statements or are familiar with that, that may indicate that it's being sent by a vendor or another third party from their account, their business checking account or their personal account, however you get paid. And it may not be easily verifiable. We don't want to work with that, even if it is, because it doesn't count as actual deposits. What you want to do is make sure you're depositing directly into that high revenue generating business checking account for the most part. You may have other business checking accounts, one for products, one for inventory, maybe one for payroll, etc. And you're moving it from that account to another one, which in a lot of cases is okay. We just have to see that wire transfer and see how it's being transferred and what's the entity, if it's being sent from another entity, how's that working, and so forth. So, which looks like online transfer from checking on your bank statements as an example of that. And if you have multiple business checking account transfers from your own, then we'll have a look through all of them. But also make sure that when you apply with your highest revenue one, and these can be counted as true deposits. If you have bank statements with different bank accounts and institutions, then we will have to need them all. If we're looking for 3 months of bank statements, we'll look at the 3 months of bank statements from this business checking account, and then we'll also look for the ones from the other one. You might need just 3 or maybe more or less. You want to deposit more per month than what you withdraw, and having a great average daily bank balance helps justify giving you more and helps determine what you can pay back. We can consolidate your MCA loan if you have one or two of them. Usually just one in a lot of cases lenders will look for. There's refinancing situations until you've paid off over 50% of the balance. And if you have multiple already, a monthly lender will not come in unless it's a first position and your balance is very low or completely paid off for them to come in, for them to consider you, and you have a cash advance available or out there and you haven't paid off 50% of it, they won't look at it. And maybe if you're 80 to 90% plus, they will try to consolidate, but a lot of them want to move into a first position. Not have a lot of non-sufficient funds, NSF for short, or negative days in any of the last 3 to 6 months. Usually it's like no more than 5 for a lot of cases. Example, bounce checks, you have chargebacks, a lot of these issues. You're withdrawing out of your account and there's really nothing there anymore. Having no defaults. If you currently have merchant cash advances and haven't paid off, and I just mentioned this, haven't paid off over 50% of the balances and have multiple ones open, this option really will not work until you paid them off completely. Or you're at your last position, your first position, you paid off over 80 to 90% usually a lot of cases. But like I said, most lenders want to come in on the first position, true first position, to get you that monthly repayment. So your overall total cost of financing can be more with an unsecured term loan, especially if you are seeking above 2+ years. Perhaps you figured out that a cash advance can approve you for 15 months and you can get approved between 1 to 2 years, the same with an unsecured term loan, but it may be more costly within an unsecured term loan because the total cost of financing, the interest that you're paying on that. It may be the same type of approval amounts. Maybe the percentage is less with the cash advance, more or less, and you're paying less towards the interest where you're saving 20 to 50 to 100,000. I've seen in a lot of cases more or less, and that does happen. So just be very careful about taking that and what makes sense, and that it sometimes can be a little bit more expensive. There may be another alternative, but these work well too, and they're unsecured. Especially if you didn't need so much time, but there are early payment discounts in a lot of cases. Some lenders will say, no, there's no early payment discounts. There are prepayment penalties, but not all. And a lot of the time, no prepayment penalties. Note, we can also try to add an unsecured line of credit on top to get you the most amount of funds in one shot, and then over time to help you keep getting more. So let's say you can get approved for a line of credit. Well, I only got approved less for a line of credit more than I did for a lump sum. So I'll take the lump sum of 150,000 and then I'll begin with 55,000 on a line of credit. That's okay. I want more, but you have to use it. It's like a credit card. Use it more, get higher limits. So you have to start somewhere. I wanted 300,000, but I only got approved for somewhere around 200,000. Well, pay off half of that or pay it off much faster. We can have some add-on funds if possible. We can look at refinancing at a point, and we can get you in and out to another service if possible, or continue to go underneath the same one. Perhaps you're getting a look at for the SBA, but you need bridge funding. So this product may make sense. And I spoke about a product not too long ago called the Hybrid SBA loan that I'll link you guys to down below in the description. And this is where you can get evaluated for an SBA loan. And in the meantime, take bridge funding like an unsecured term loan, unsecured line of credit, a merchant cash advance, and use that in the meantime. And then when you get approved for the SBA loan, if so, let's say within just 3 months of using that unsecured term loan of 150,000, you only pay 6% interest on it or so, whatever that comes out to be. And we consolidated it and moved it underneath the SBA loan. And it makes sense because now you have a longer term there. So there are various ways of making sure this works for you. So if you're asking for amounts north of 100 to 150K and you can qualify, we will need the following from you. Documents needed for funding under 100K, usually 60-second online application. Sometimes it's a PDF and or. Recent 6 months of bank statements, 6 months of recent credit card statements if applicable, not always necessary. And we see this a lot because of the merchant cash advance traditionally, credit card processing. Invoice of equipment required if you're looking for equipment. Document needed for over 150K. 60-second online application, similar. Recent 6 months of bank statements. 6 months of recent credit card transactions, if applicable. Most recent business tax return. Profit and loss, balance sheet. Previous year's tax return. Sometimes we may need more than 1 year, but in a lot of cases, just a year's worth of tax returns. Debt schedule. And in this circumstance, I have individuals who maybe haven't filed an extension or haven't done all that or are in the process of with their business tax return for 2021. We could look at a 2020 tax return and we will just need to know there's a note or an extension being filed and this is being worked out. But the most recent one, and then according to the year, makes the most sense. Debt schedule, if there is any debt, aging accounts, receivables, and accounts payable report if you have one. So that's what you're looking at more or less with this type of service. You can see I just showed you a couple of different options with that monthly lender and this one too. And I'll always show you the best one that makes the most sense for your situation. So we already saw this one. And I can run some ballpark numbers for you, but just keep in mind that a lot of individuals end up getting between 1 to 2 years. You may want 2+ years. So an SBA Express Loan would work, perhaps, if you can qualify for more than 2 years. Or you don't have profitability, the business credit isn't enough for them. There are more factors, then we can look at getting you 1 to 2, if not a little bit more. More details. The approvals are, we already went through this, excuse me. For the third option, this one more or less is off the table now. So I wouldn't even pay attention to this one, but I'll go through it anyways. An unsecured business term loan could work too, but these are more of a non-banking solution. You already kind of know this more or less. Medium to higher rates in some cases with a more medium to longer term, less than the SBA. You usually get longer terms like 2 to 10 years, but again, just keep in mind, this isn't really one that's as offered anymore. Maybe if the market came back to what it was, yeah, but it's much harder to. Usually get longer terms like 2 to 10 years or so with an unsecured business term loan as opposed to 4 to 24 months with perhaps an MCA loan, depending on your service. Sometimes they go to 4 to 36 months with monthly terms, but with higher interest rates, about 25 to 50% is this one with this lender. And like I said, this does not have to be a reality. There's the other one between 6 to 25% or so, depending on the service program. These are fast funding times, time to approve between 24 hours, same day funding, no collateral required. I'll just kind of go through this rather quickly. Qualifications: 240,000 per month, 20K per month. 3 months time in business credit established. Important details: monthly payments, early payment discounts can be used to refinance. Documents that are required for pre-approval: business loan application, 3 months of bank statements. Excuse me, guys. I'm not a talker, but I think this is a value to you, so I want to make sure I get this out. A little bit tired here. Business loan application, 3 months of business bank statements, phone call with an analyst. For 2 to 10 years of unsecured financing, interest rates are 25 to 50%. For 1 to 2, sometimes 1 to 3 years equals 1 to 3% per month in interest. And I just made up some scenarios here. All 50 states are eligible, so we'll skip that part. And then there's also an online bank term loan. If you qualify for traditional banking, then you could qualify with an online banking institution, which is similar to a physical location. It's just digital, but it offers more flexibility and less requirements. So this could be a good option. It could come with collateral, maybe a lien on your property or on all business assets. So maybe that doesn't sound as attractive to you. Not in all cases, but they'll usually look at that and put a lien on that. It's an online bank term loan, so that's expected. Some details: offers you between 30 to 350K in loan funding. Your choice of 2 to 3 or 5 year repayment terms. You get monthly repayments. There are no prepayment penalties. You get fast loan funding typically within 2 weeks. Fixed annual interest rate starting at 6.99%. Rates can be 7 to 12% or so, but it can be like 6 to 28% or so. Leniency on use of proceeds options. Term loans can support construction, remodeling, and more. Bank term loan general eligibility. Minimum of 2 years in business. Be a US-based business owner by a citizen or lawful permanent resident. 660 or higher FICO, as we're seeing here as a common trend. have no outstanding tax liens. Your minimum annual revenue requirement is of $250,000, so somewhat similar to the others. Your business must not have any bankruptcies, foreclosures, or you will want to say liens here in the last 3 years. No recent charge-offs or settlements. Your business must have appropriate cash flow, or cash, I should say, too, to support the loan payments. So I'm just going to quickly show you guys this and then kind of go through some examples. So you can see what it's kind of being used for: general working capital, purchasing inventory, hiring employees, refinancing business debt, marketing, construction, or remodeling, business acquisition, partner buyout. There's a form of equipment that can be used for this, but a lot of times lenders won't always do that. There are several common and eligible uses: startup financing, house flipping or real estate development, refinancing personal debt, floor plan financing. So any kind of like real estate investment, lenders don't want to lend for that. Fixing and flipping, something else is happening like that, be cautious. Eligible industries: hair salon to online retailers to accounting firms. There are so many small businesses that are typically eligible for a bank term loan. There's a lot of them. These are just the limited ones. While most are eligible, there are a few exceptions like gambling or real estate development. There's more of a list. I'll kind of just have you take a look at it while we're looking right here. General eligibility: 2 years in business with corresponding tax returns. For-profit business, not profit here. Proceeds: working capital, debt refinance, and equipment purchases. Minimum annual revenue requirement, you saw, $250K. Individuals owning 20% or more of the business must be U.S. citizens or legal permanent residents. Credit: for all individuals owning 20% or more of the business. Good personal credit: minimum personal credit of FICO 660. Business credit score, liquid credit, 155 or greater. Public records: search for business owners. No bankruptcy in the past 3 years, foreclosures, or open tax liens or outstanding judgments. And I should say that. Cash flow analysis is calculated with using these documents: 2 years of business and personal tax returns, year-to-date profit and loss and balance sheet, business debt schedule, 6 months of recent business bank statements. Barriers to funding: declining revenue trends in borrowing, business or affiliates, unfiled tax returns, criminal records, businesses or guarantors that are mid-litigation, undisclosed debt / UCC liens. And I also put a little bit of the personal / startup loan. But if you're a business owner who doesn't want to put everything underneath their personal, then you have the unsecured term loan. Now, for those of you who do not have business credit established, then perhaps a personal loan, merchant cash advance, etc. would work, and there's some other contingencies. So over here, I just made a few quick examples. So example number 1, with $250K funding at around $2,500,000 in annual gross revenue / sales is perhaps what you're doing, that or more, because you get approved between 10 to 15%, so at a minimum $250K there. For 36 months, let's say you got 3 years, it's mixed with working capital. I have a huge growth and expansion project, and I have probably equipment to add on top of that. And if it isn't those things, and not necessarily want to approve you for that term, but in a lot of cases, the monthly unsecured term loan lenders want to see some type of equipment and more growth return on that investment of what you're taking and using. It has to be justifiable. Otherwise, you start off with less and then you move your way up. So at 40%, and we're saying 40% interest there. And again, that's an ideal situation where it would be you getting approved between 1% and 3%. And at 3 years, you didn't have 12% or you didn't have that 1%. So we looked at it a little bit different. So you're seeing a monthly payment of $12,037.54. APR 40%, about 41%. Total payment $433,000 plus. Total cost of financing $185,000 plus. So yeah, higher monthly repayment, but how fast do you need the funds? How much do you want to be in debt for? Do you want to get rid of this fast? Do you qualify for other options, profitability, blah, 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 blah. So it may make more sense for you to do this, and the benefit has to exceed the repayment. So if you're taking that money and saying, I get $250K, well, I'm going to be making, I'm doing around $250K per month already, then I'm going to be making $300,000, $400,000. So you have to justify that. So with $250K funding at around $2,500,000, somewhat similar, in annual gross sales / revenue for 24 months instead at 40%, you see how the monthly repayment then goes up because we have some changes in the terms and rates. And then The APR a bit higher, 41+%. Total payment, 367,000 and above. Now your total cost of financing becomes quite a bit less by 70 to 80,000 or more or less here. So see how your total cost towards the interest in the whole total combined becomes less when you have only 24 months or 2 years instead of 3 years. Same 40%, but now you have 2 years instead of 3 years, so your total cost is much less. And a lot of us think we need more when in fact we don't need that. We overthink it. We think, okay, I want more of a cushion in case I don't. And that's not the best way to look at it. You have to understand your numbers. With 100K funding at around $1 million plus in annual gross sales / revenue for 24 months at 40%, this situation now drops dramatically to 6,000, where we were at 15,000. And this is because you are also getting less. Instead of 250K, you're getting 100K. So that's another way to look at it. If you have negotiation power, or you can start off with less amount, then we can begin there. So APR does go up because of these little contingencies. Total payment, 147K, a lot less. And look at your total cost of financing. What a huge jump from 185 to 119. What did we have before? Oh, yeah, we were at 185, 119. And then now we're at 49,000. So it would behoove you, it would make more sense to pay off the debt as fast as possible, right? When you get one of these unsecured term loans. So why would you want to look for something that gives you 3-4+ years if you're going to get, usually even with lower interest in cases, you get a lot higher total cost of financing? They're not SBA loans, just so you guys know. If you guys want to learn more about those, down below in the description. So with 150K at 12 months with 12% interest, this can be an ideal situation. The monthly repayment would be about 13,000. Your APR is significantly less. Total payment, 160,000 and above. Total cost of financing, way less than the first one. Look at that, 13,000 you're only paying. And just so you guys know, it's not all about AP. Sorry about that. It's not all about. Oops, sorry. Getting I got a Seagate message from my external hard drive. I'm not sure if you guys saw that, but I'm back. Now, you have to think about what those use of funds are for, how much time you actually need. Are you rate sensitive? Some of you guys can't even qualify for better rates, better terms to begin with. You have to move up there. So over here, like I said, it's not about the APR or the AIR all the time. It's about the benefits. You can see 50% APR, 40%, 30%. However, that person who takes a monthly repayment of 10,000 or so on 150 or so, they're taking that and they're making more money with it. They know what they want. They are coming into this knowing that the pattern in their marketing and advertising campaigns, they put $1 in, got $3 out. And so it's a recurring pattern. They know how much they need, how much time they need, as opposed to somebody who comes in and goes, well, I just want 3 years, and then perhaps can qualify for it. They put up equipment and then come to realize they didn't even need that amount of time. And there's a lot more. So 150K at 18 months with 18% interest. Monthly at $9,580. APR, 20.85%. Total payment, 172 plus. Total cost of financing, 25,000. So just a little bit higher than what we saw here at 13,000. With 150K funding at $1,500,000 in annual gross sales, which perhaps are doing to get that amount approved for. For 12 months at 24%, the monthly repayment here is 14,000 and above. APR 27.44%. Total payment 170K plus. Total cost of financing 22,000 plus. With 150K funding at $1,500,000, for 24 months now, we just went up higher. The interest rate came up just a little bit. That's 8,000, 26.92. 192,000, and then total cost of financing 44K plus. Two more. With 150K, at 50% with 4 years, the monthly repayment on that is 7,285 plus. APR 51.33. Total payment 349. Total cost of financing 202,000. So you can see how those be more costly because now we're increasing the term, and it's unsecured. So you're going to be paying more towards the interest. With 350K at 2 years with 36% interest, the total cost of financing being 149,000. I'm just going to go through these quick. $250K, 5 years with 25% interest, $7,000 plus payment, 25.67% APR, $4,440,000 total payment, $193,000 total cost of financing. Okay, I feel like I've covered everything here. Let me see if I have another document that I want to open up for you guys. There's also, here, let me move tabs. There's also the hybrid SBA 7A loan. We could look at doing an SBA Express, a line of credit towards that program. There's an export program too. There's the standard up to 5 million. You get up to 350K, 250K in some cases, 500,000. There's quite a bit. But this is the hybrid SBA loan. I won't talk about it too much, but it's two separate loans. One's an unsecured financing product, term loan, line of credit or cash advance, which can be funded easily and quickly. The other loan is a 10-year SBA term loan, which can then be, which can give a letter of intent within a couple of days, but takes 6 to 8 weeks for you to actually receive your funds. But I'll leave more information of this product down below in the description, and it may make more sense for you if you're looking for, above 2+ years and you qualify for like 3+ years. Then perhaps an SBA Express loan, if not a standard loan, may be more beneficial than an unsecured term loan. And in these, like I said, cash flow is number one. 2, we're looking at equity, liquidity, and then collateral. Sometimes collateral will be needed depending on your details, not in all cases. Cash flow, if it's good enough, it's there. That can help service the debt. Not every lender takes collateral. They might take a position on your home. They might be taking a position on your business assets, property, real estate, but it's not always a necessity. And I'm tired. So appreciate you guys for tuning in, hearing me out on this unsecured term loan with the different lenders that are out there right now in the market. And you can always replay this back. Make sure to watch it all the way through and understand that, yeah, you can get 1 to 5 years. There are 2 to 10 years, but that's a little bit far-fetched, a little bit harder to get right now. To get longer terms like that, securing it with collateral is the way to go. And although we didn't cover that topic, heavy equipment, real estate, unpaid invoices, that's something you can offer up to receive the funding. And then you have the unsecured financing, the bank term loan that perhaps maybe be requiring collateral. There are lines of credits out there, merchant cash advances, faster funding, personal/startup loans, etc. So I think that's what I'll leave it at. We're just underneath an hour. I could go on for a lot longer. I'm a bit tired though. And appreciate you all for tuning in. Thank you for listening to me and understanding how these business term loans work. Unsecured, they're secured. Secured term loans, you can get it with less interest rates, longer term. But if you don't want to offer collateral, it's okay too. If you don't have collateral, not sufficient enough. Merchant cash advances with bad credit. If you don't meet a 660 FICO and you have less than desirable credit, we can start off with those products first. And then in time, move you to a monthly lender. We can work on fixing and improving your credit, building some trade lines, getting access to credit lines on the back end. And then in the meantime, you're building out more business credit while you have the funds you're using. And then you're using business credit cards within your business. And then you're increasing your limits. And now you have access to these funds you can use that's not tied to your social security number. You have credit cards you're stacking. There are a lot of multiple ways to do this. So hopefully you guys enjoyed this video. Please give it a thumbs up if you did. Please share it with others who you feel will get value out of this. It can be a complete stranger, friend, or family member. And if you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I come out with. And if I didn't address this, like I said again before, I usually don't let all this grow out. Sometimes this, not this. This usually stays here, but I will probably be shaving sometime soon. Just been very busy, and I just wanted this new look. It was a transition from summer to fall, and it's not the whole No Shave November thing. It's just it's a new beginning, a new way to clear the air and start off fresh again. And Q4, just to be honest with you guys, this is probably going to be the most productive that I'm helping out a lot of business owners, because that's when they're all looking for financing, getting ready for the fall, getting ready before the winter comes. That's what you want to be doing before any of the rates increase even higher, if the rates are even a factor. But again, it's not about the rates. Usually it's about the benefits exceeding the repayments. And you have to be able to make sense of that. So that'll conclude everything. Look down below in the description for all of this information. My options, the business loan questionnaire form. If I didn't show you guys that, it may look something like this really quickly. That's right. There it is. So it may look like this, or it might just take you directly to the contact form, but just, select the one that makes sense to you, or your startup with this amount of time or that amount of time, not a startup. Well, I'm not a startup, clicked here. And then it could take you to a page that looks like this. And then you can go ahead and get started right there. I'm not a creditor. This information is safe and secure. And if you complete the questionnaire form below, you'll get a personalized and customized email response for your best funding option and options. Plus, get a free 6-step pre-approval lending checklist to get you approved for funding much faster. Like I said, again, I'm not a creditor. This information, again, is safe and secure with me. And I'll show you where to go and apply and what makes the most sense, what doesn't make sense, etc. So that down below in the description. That will conclude everything from myself. Appreciate you guys for tuning in. Talk to you guys on the next one.